Welcome to ForexTV.com's PM Exchange. It's Thursday, January 24th. I'm Remy Hoki. Today I'm joined by Ashraf Laidi from CMC Markets. Good afternoon, Ashraf.
Good afternoon, Remy.
Great to have you on the show today.
Always a pleasure to be here.
Well, at the end of the New York session, we're seeing U.S. equities rebound into positive territory. And as a result, we've seen dollar-yen touch 107 and the yen crosses rise. But also, we've been seeing euro-dollar breach 174.50 and is trading above that at this time. But going forward, given the turbulent moves we've been seeing in equities, which fundamentals are driving price action in the majors?
It's really what you said. You know, the people were saying, is the stimulus package going to be big? Is it going to be big enough? Is it not going to be strong enough? People said, well, so. You know, we had this bipartisan, package here, and you know, some people were complaining it's too small, it's too big, but the market thought it was good enough. The markets ignored existing home sales. You know, existing home sales came in and they fell, I think, within expectations, 2%. What else was there? The IFO survey, which, you know, here's the thing, it was a very good day for the euro. It was all about the euro. But you asked me about the yen, so I'll talk about the yen first.
Okay.
I really think that if, you know, I'm speaking to you right now in a 315. So assuming that the stock market doesn't really have one of its last minute surprises, you know, let's assume the stock markets end up higher. Let's assume that the stocks in Asia continue to do well. Then I really think that the yen continues to be weak, and I really like to sell the yen here into Friday against the euro. So I like to see the euro really regaining above 158, going to as much as 158.50. Dollar yen, I don't like it above 107.30. I think 107.30, it used to be a support, now it's a resistance. So 107.30 is a big resistance there in dollar yen. So just be careful there. I'll probably be a seller there into next week. But then again, next week we might have this another rate cut, so that may be bad for the yen, and you could see dollar yen going above 107.30, 107.40. But that's really what I think about the yen right now. If you really don't like the yen, you can sell it against the euro because the IFO survey today was very good. I mean, it was better than expected. And the head of the central bank of Germany, you know, Weber, he basically said that rate cuts talk is wishful thinking.
Okay, Ashraf. So the White House and Congress leaders have come to a decision on the stimulus package, but I think the market is focusing on the official Fed meeting, which is next Wednesday, January 30th. And we've been hearing continued hawkish comments from the ECB. So about how much do you think the Fed will move next week?
How much do you think?
At this point, I would say 25 for sure,
Really?
Possibly 50.
So what's your probability of 50?
I believe Fed funds futures yesterday afternoon were pricing in above 80%.
Yes. Do you know that the Fed funds, they had a probability of around 50% chance of a 75? I think that the jobless claims was okay. They were lower again. They were expected again to go up to 320. They fell to 301,000. That's a good thing. I think they will probably stick to 50. You know, and how incredible is this, Remy? You were just speaking here. You know, how can you say the word only and 50 in the same sentence? Who would have imagined that? You know, how fast and how far have we come? So basically, yes, I would think they would do 50. If they would do 50, I don't think the market is that spoiled to the extent that if they get 50, they're going to sell off. Unless we're going to get some more bad news on Monday and Tuesday, and we're going to get some bad data because there's the new home sales next week. And you know, then maybe the market may be crying for 75 basis points. I think they will do 50, and probably that would be good enough for the for the yen crosses here. It would be good for the euro dollar, you know, and it would sustain it probably above I would say around above 146.60.
Okay, Ashraf. Well, before we go into the major currency pairs, you did mention next week's data. Next Friday, we have non-farm payrolls at the end of the week, so it will be quite a volatile week. But earlier in the day, on the phone, we discussed the outlook for the major equity indexes, and you mentioned the aggregate margin debt. So could you tell us how this acts as an indicator of where equities are heading, and how this translates into your forecast for the majors?
Yeah, if you have the chart here, I believe that it's going to come out on the screen. It really really shows the monthly use of margin debt in the New York Stock Exchange by the participating New York Stock Exchange, and it is in billions in that chart. So it really shows you that when we, in the declines of fall 1998, actually 87, in the crash of 1987, and in the declines and in the bear market of September, October 1998, and of the bear market of spring 2000 into the rest of 2001, and into and in the current one, when we saw the margin use reaching a peak, and after, let's say, if it fell for 2 consecutive months relatively sharply, as is indicated in the chart, it will show that that is usually as a result of margin calls, as a result of the surging, the volatility which leads to the execution of margin calls, and the members and the clients of the participating firm basically lose money. That is a result of a falling market, and we have reached a high in July, and then we fell all the way to I think we went as high as $380 billion in July. Then we fell in August, we fell in September, we fell November, and I think these declines are they do repeat the scenario that we saw in the previous bear market, and that really shows that there is going to be further declines in the stock market. We told you it's going to fall by 15-20%. It already fell by 13%. We think there's going to be another decline of another 12 to 15%. That is not good for the yen crosses. We do think that dollar yen is going to have to be testing 103. The Aussie next in a couple of weeks' time, it's going to await the decision from the RBA. I don't think they're going to raise rates, and that may be bad news for the Aussie.
Okay, well, you've touched on dollar yen as well as Aussie yen, but what about for euro yen from a technical perspective?
Yeah, the euro yen from a technical perspective, in spite of the big climb that we saw today, we went really all the way above 157, 150, 158. I really think that there is further ground to test, to regain 158, go to 158.50 into Friday, even though now we pulled back towards 157.50, 157.60. If we have a good, decent Asian session, we could regain 158 towards 158.50.
Okay, and last but not least, let's cover the British currency, the sterling. So we had the BOE minutes out yesterday, and the fundamentals point to weakness in their economy. In the New York session today, we opened around 196.30, and right around now in New York afternoon trade, we're around 197.50. So can you tell us what factors point to downward pressure for sterling dollar?
Just like last week, just like in the first 4 days of last week, the sterling rallied mainly on the back of dollar weakness and on the back of some return to risk appetite. I think there will, unlike last Friday, I don't think the sterling is going to hit into a disappointing retail sales like it did last week. So I think it's going to get away with that, and I think it's going to test 197.70. I really think the 197.70, and there's a big resistance of 198.20.
Okay, Ashraf, as always, thank you very much for coming on the show.
Thank you.
This has been your Forex News with Ashraf Laidi from CMC Markets. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks bounced back with the Dow Industrials gaining over 100 points on the day. The major indexes got a boost as the White House and congressional leaders announced an agreement for an economic stimulus package. Stocks moved in and out of positive territory earlier in the day but maintained gains later in the session. In today's U.S. economic data releases, existing home sales fell 2.2% to an annualized rate of 4.89 million units. Total 2007 sales fell 12.8% from the previous year. On a positive note, initial jobless claims fell 1,000 to 301,000 for the week ended January 19th. The 4-week moving average fell by 14,000 claims to 314,750. At the closing bell, the Dow Jones Industrial Average gained nearly 108.5 to close at 12,378.61. The tech-heavy Nasdaq added 44.51 to close at 2,360.92, while the S&P 500 added almost 13.5 to end at 1352.07. In the fixed income market, U.S. Treasury prices declined as the stock market extended a rebound into the second straight session. The 10-year benchmark note fell with its yield at 3.69%, up from 3.6% late yesterday. The 30-year long bond also fell with its yield at 4.35%, up from 4.32% late yesterday. And the 2-year note fell with its yield at 2.284%, up from 2.14% in yesterday's session. Taking a look at energy, crude oil futures climbed over $2 a barrel after the Bush administration and congressional leaders agreed to an economic stimulus plan. Prices were already higher following the latest government report, which showed a decline in heating oil supplies. Earlier today, the EIA reported that crude oil supplies climbed by 2.3 million barrels in the week ended January 19th. NYMEX crude for March delivery gained $2.42 to settle at $89.41 a barrel. Meanwhile, the EIA also reported that distillates fell 1.3 million barrels last week. At the end of today's session, February gas added 3.2 cents to close at $2.2828 a gallon. February heating oil rose 5.32 cents, ending at $2.4763 a gallon. Also, the EIA reported that natural gas inventories fell by 155 BCF in the latest week. February nat gas futures rose 18.1 cents to settle at $7.802 per million BTU. Over in the metals complex, gold futures soared over $20, ending the session above $900 an ounce. February gold hit an intraday high of $911. Futures prices settled up by 22 and 70 at 905.80 an ounce. And in other metals, silver prices rose with the March contract up 36.30 cents on the day, settling at $16.33 an ounce. March copper rose 0.95 cents, or nearly 4%, to $3.1715 a pound. This afternoon, we're joined by Tom Puckett, commodity broker at KS Futures. He'll recap today's action in energy metals and give us a short-term outlook.
Thank you, Remy. As we look at the week's progress so far in the various markets, energies, metals, as well as other that are financially connected, kind of a wild week. We've seen some very interesting turns in the Dow, for example, down below 12,000. Now we're back up above 12,000, showing some strength. The news for the last couple of days has been that the big troubles might be upon us. The R word has been threatened around, and now all of a sudden we find ourselves coming back up a little higher. With the Dow at about 12.3 to 12.4, it's looking like the market still has some pretty good health in it. Across the Atlantic, looking at the euro currency dollar mix, where you see the dollar pressed down and the euro up a bit at 147.52 right now on the euro and 75.79 on the dollar. And this is relating directly to the price of gold, because as the rate was cut by the Fed on the loan rate about 3/4 of a point on an emergency basis, gold became the haven. The dollar was pressed down, and a lot of the Europeans went to gold as well as locals as well. So we have the dollar, the gold, I should say, trading above $910, depending on the futures upon which month and delivery. We're looking at 912 out to about 925, even 930 in the back months. So we have a very strong gold presence right now. Silver, likewise, is up today about 45 to 50 cents. In the $16.50 to upwards of that towards $17 range, both in near record territory, if not outright record territory, at least for recent trade. The response, no doubt, has to do with the look of the economy, and yet we look at the fact that today, after the bad news of the last few days, we see the market still pretty strong. It's interesting to see that the equities are up, the S&P and the Dow both positive, getting equity growth, going positive. At the same time, we have gold moving up. The silver market is following right along, and so the trade is very, very active, and it's perhaps almost into a whipsaw market, but at the same time, there's justification for the positions that are being taken, no doubt. In the energies, across the other side, we had the petroleum stocks come out this morning showing that, for example, crude oil, actual stocks are up 2.3 million barrels this week as compared to last week, yet we are a little below last year. The gasoline stocks are up about 5 million barrels compared to last week, and in the range, actually slightly under last year, so pretty strong there. The distillates are up in some phases, but overall they're down about 1.3 million barrels. Strategic petroleum hadn't been tapped. In fact, it's where it's been for some time and larger than a year ago. So basically, the look at the market as we finish out the week tomorrow might be looking to see a little profit-taking potential both in the gold and silver as well as in the energies. At the same time, the dollar, even though it's in the 75 to 76 cent range right now, may start offering some attractive positions on the long side, whereas the euro may go contrary, as it has been, might attract some shorts into the market. Overall, the economy looks like it's pretty good. Things are doing pretty well, and the doom and gloom sayers that seem to be looking for headlines don't seem to be lasting too long in the market. So things certainly can be very changeable, and every trade, every position needs to be carefully scrutinized, both as to assuming the trade and staying in the trade. So looking at Friday tomorrow, I think we're going to have a very interesting week, and the weeks ahead I think are going to be perhaps heading toward that so-called magic $1,000 gold range in the metals. Whether we do or not will depend strictly upon the trade, but definitely the energy and the mindset is there. So let's see what the follow-through might be. That's a quick look at it, Remy. Thanks a lot, and see you next week.
That was Tom Puckett, commodity broker at KS Futures, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.